Hi guys, this is FD for Sage5.tv. Welcome to Sage5.tv channel where we dish alpha like no other channel here on YouTube. The content might be familiar with you, but the way we deliver our alpha, you may find it to be unique to Sage5.tv alone. Anyway, there you have it. So today we are going to share with you some information on a project we really like, and that project is Burnbridge. And the information I'm going to share with you with regards to Burnbridge is not financial advice. If you require financial advice, guys, I think by now you know what to do. Please approach someone who's trained to give you financial advice. Anyway, so founded in 2019, Burnbridge is a protocol for tokenizing risks. It is described as a sort of decentralized finance or DeFi, legal for creating tradable tokens that expose a participant to market volatility. Burnbridge expands the functionality of DeFi to make it more flexible and efficient by tokenizing market fluctuations and exposure to risks. It can reduce volatility for conservative investors or increase it for day traders. Burnbridge enables traditional risk management tools and fixed income instruments on the DeFi market. The main focus is dividing cryptocurrency risks into tranches so market participants, depending on their risk profile, can invest in different products or assets. Now, as you all know, if you have been following us from the very beginning, you should be aware of the fact that we believe the time for derivative DEXs and platforms will come with mass adoption, especially with the onboarding of sophisticated players such as money funds and family offices. Some of these guys do not want to leave cash on the table, so to speak. If they can take it all, they will go for it, and that is derivatives for you. Burnbridge value proposition. It offers the opportunity to earn fixed income versus the likes of Compound and Aave by aggregating yields with fixed income and flatten them to improve the efficiency of the system. Burnbridge also creates tokenized derivatives based on market fluctuation. By tokenizing cross-platform risks, Burnbridge can expose users to large, medium, or low price fluctuations. For example, smart alpha bonds on Ethereum can be used as derivatives to hedge against any ERC20 token price fluctuation. Burnbridge also offers a risk management that is suited to different types of investors or traders. In alignment with our own approach to investing within the crypto space, Burnbridge is one of the few projects that actually admit that there are risks involved, and then they go on to outline some of those risks. Some of the outlined risks are as follows. There is smart contract related risks. Just like with any software bugs should always be expected in underlying code. Malicious players are known to seek and exploit any weaknesses within the underlying software code, which could lead to hacks and loss of funds. There are also what's known as third-party risks, where participants such as infrastructure providers may themselves get exploited or their infrastructure fails, leading to loss of funds. Liquidity risks are those risks which arise when there is not enough liquidity in the market to allow for smooth execution of trades. Financial losses could be incurred when, say, DEXs fail to provide enough liquidity for particular markets. And there is one that most people always struggle with, which is impermanent loss, where what you put in is most likely not what you're going to get back. This is a risk that may arise when providing liquidity to a decentralized exchange or DEX or any other DeFi platform. Impermanent loss occurs when the value of the asset pooled as liquidity changes over time, which may or may not result in a loss for the investor. And finally, we've got market risks. These are risks associated with the fluctuating nature of crypto assets. Liquidity providers could suffer losses as a result. So those are the 5 risks that Burnbridge has outlined as risks involved with engaging with the Burnbridge protocol. Some of the projects on offer from Burnbridge are Smart Yield. This is a risk tokenization application to take on unique investment positions based on a participant's preferred risk appetite. It allows users to perform a simple interest rate swap, with one side taking more variable risk and the alternative side taking a fixed rate of return. The second product is Smart Alpha Bonds. This product builds tranches of single asset and multiple asset pools that generate yield, where lower risk ramps get lower returns when the underlying asset rise and lower losses when they drop. Smart Alpha bonds can be used to tokenize price risks. Such bonds are offered to DeFi investors at different levels of returns, and the risk is dampened by each product's risk-yield balance. The third product is Smart Exposure. This protocol passively rebalances any 2 assets in a participant's portfolio. Investors can use this feature in combination with tokenized strategies to improve their return on investment results. As one can tell, oracles play a vital role in Burnbridge's system by providing and monitoring accurate asset price feeds when pools open and close to ensure a fair distribution of earnings and related losses. So straight away, what should be clicking in your head is oracles. Which oracles are associated with sophisticated players and which oracles cater for high volume trades? That's what people should be thinking. That could indicate that if this side of things takes off, the associated oracles will also follow suit. So which one should you use? Which one should you follow? Which one should you research on? And which oracle should you invest in? And there goes the story. Anyway, so as part of our deal DYOR risk evaluation, we are going to apply our usual 13 elements, which covers decentralization, security, scaling, interoperability, the project team, social media presence via Discord as well as via Twitter, and then we look at the project use cases as well as the tokenomics. So starting with decentralization, Bunbridge only exists as a decentralized autonomous organization or DAO that is coordinated via the bond token. Holders of the bond token can determine the outcomes for future smart contract deployments as well as the distribution of revenues earned from associated applications. There are approximately 12,000 holders of the bond token, which lends well to the claim that Bunbridge is relatively decentralized. As far as security is concerned, Bunbridge as a DAO on the Ethereum blockchain, it benefits to a greater extent from Ethereum's security. All smart contracts used by the Bunbridge protocol are also audited by leading teams within the crypto space. When it comes to scaling, while Bunbridge is hosted on the Ethereum blockchain, and we know Ethereum has got scaling issues, Bunbridge can now be bridged to Arbitrum, Ethereum's latest scaling solution. The Bunbridge DAO governance contracts have also been upgraded, and the DAO itself moved to Optimism, another Ethereum layer 2 scaling solution. So you can see they've actually thought through the scaling issues and they've engaged Arbitrum as well as Optimism for various applications. Now on to interoperability. Bunbridge is on Ethereum and expanded to Ethereum's layer 2 scaling solutions such as Arbitrum and Optimism. Outside of Ethereum ecosystem, there isn't much, but then most EVM compatible blockchains are compatible with Ethereum's layer 2 scaling solution. So it's a long winding route to interoperability, but it's quite possible for smart contracts to engage with Bunbridge, and those smart contracts are coming from, say, Cosmos IBC or from Polkadot, the Solidity smart contracts. The smart contracts from Polkadot written in Substrate, engaging or interacting with Solidity smart contracts from Ethereum is quite possible. But there you have it, that's EVM compatibility for you. When it comes to the project team, we understand there are approximately 14 members according to the project's declaration. Social media presence, via Twitter, Bunbridge has got over 30,000 followers, and on Discord, Bunbridge has got just over 5,600 Discord members. Here are some of the use cases for the bond token. Ticker symbol bond, of course, BOND. The bond token is used for betting, that is placing bets or fluctuating derivatives. It also provides fixed income to participants. It provides mechanisms which protect participants against downside price movement. The bond token is used for voting on governance proposals via a decentralized, incentivized governance system. Bond can also be staked to earn reward. Now on to Bunbridge's tokenomics. Ticker symbol bond, BOND. Total supply 10 million tokens. Circulating supply 93.2%. And here please note that CoinGecko and CoinMarketCap have conflicting figures. So we checked with the third platform, which is Masari, which more or less confirmed what CoinGecko had on its platform as Bunbridge's circulating supply, which is 93.22%, which is brilliant, which means there's less dumping for new investors. Token distribution. Advisors 2%, the core team 12.5%, the DAO treasury 10%, yield farming 8%, investors 7.5%, the community 60%, which gives us an insider token allocation of 32% according to our own analysis. Now, like I said, as part of our DYOR risk evaluation, we are going to apply the following 13 elements, which are decentralization, security, interoperability, project team, social media presence via Twitter as well as via Discord, age of the project, use cases, tokens issued at project launch, as well as tokens in circulation at the point of recording, maximum tokens available, as well as insider token allocation. We then classify the aggregate score of those 13 elements under 4 risk categories: in go for it category, potential category, will go to zero category, and no go category. They all have varying scale on what points should be scored for a project to fall under each of these risk categories. So here are the scores we've allocated to Bunbridge. Decentralization, we allocated 5 out of 10. Security, 5 out of 10. Scaling, 5 out of 10. Interoperability, 5 out of 10. Playing it safe there, I can see. Project team, 7.5 out of 10. Social media presence via Twitter, 7.5 out of 10. Social media presence via Discord, 2.5 out of 10. Age of the project, 5 out of 10. Use cases, 7.5 out of 10. Tokens issued at project launch, 5 out of 10. Tokens in circulation at the point of recording, 7.5 out of 10. Maximum tokens available, 10 points out of 10. Insider token allocation, 5 points out of 10. This then gives us an aggregate total of 77.5 points out of 130, which puts Bunbridge within the could go to zero category. There you have it. That's the result. Could go to zero. That is Bunbridge. Do you guys agree with the scores as well as with the category could go to zero? Let us know in the comment section. Do you happen to hold Bunbridge by any chance? Is it a long-term hold, a short-term hold? Again, let us know in the comment section. As for us, I currently do not hold Bunbridge, the token itself, but like I said, this is a project that interests us privately as well as publicly. So at some point, we are bound to make a move into Bunbridge. Let us know your thoughts as far as Bunbridge is concerned, and as well as the wider perpetual DEX and perpetual situation and derivatives is concerned. Do you think it's actually actually going to take off, because it is our ultimate belief that when there is mass adoption, especially of institutions, projects like Bridge and other perpetual protocols and futures and options, they are going to take off. You're talking of your GMX, perpetual protocol, your Ribbon Finance, and so forth. They are going to take off like a rocket. Again, that is what I think. It doesn't mean it's going to happen or it's true or it's a fact. It's not a fact. Those are just my own opinion. Anyway, guys, there you have it. Bridge for you from the Sage 5 team with your host FD for Sage5.tv. Signing out for now. Bye.